All right, everybody, I'm Logan Alec. I'm a CPA, and today I want to talk to you about real estate. Specifically, I saw a report that American existing home sales increased by a record margin during June. They were up more than 20% compared to May, which works out to a seasonally adjusted pace of 4.72 million sales. Now, if you're not familiar with the term seasonally adjusted, basically they take the raw data and adjust for the fact that home sales tend to go up at certain times of the year and down at other times. So with that methodology, you can at least hopefully isolate the relevant variables, but obviously that's going to be tricky during the pandemic, the likes of which have been unprecedented in over a century. Now, regardless of the methodology, 20% sounds like a heck of a lot, but that's not all. In fact, even that record increase in June, there was an even larger increase in July, up almost 25% compared to what they were in June, or a seasonally adjusted pace of 5.82 million. And the upward march continued throughout the summer. So I want to take a look at some of the reasons for that trend, how I expect it to change over the rest of the year, and what it means for people who have invested in real estate or who are interested in investing in real estate. Okay, so before I get into some of the factors I think are behind the increase in home sales, I want to talk about the data itself. Obviously, a 20% jump followed by a 25% jump the next month seems like an incredible increase, and that's true, but there are some caveats to get into here. Up until June, those sales had actually decreased for 3 consecutive months, March, April, and May, which were some of the worst months of the coronavirus outbreak in the United States. Even after the big jump in June, home sales were still down overall year over year, and it wasn't until the even larger jump in July that they got back above their 2019 levels. There was an increase of 8.7% from 5.39 million to 5.83 million in seasonally adjusted numbers from July 2019 to July 2020. So I wanted to clarify that even though June and July were record-setting increases, they were at least partly a rebound from the sharp drop we experienced in the first few months after COVID-19 reached the United States and began to spread. It's kind of like how the jobs report in May looked so, good because we were bouncing off the plummet in April. But with home sales, regardless, I think it's worth examining the last few months to see what changed and whether it will be enough to continue affecting the market. So the first thing that's going to have an immediate impact on home sales, right, is the fact that mortgage rates are incredibly low right now. Rates on a 30-year fixed are like 2.8 something right now. 1 year ago, it was almost a full percentage point higher at 3.69%. So it's highly likely that the pandemic played a key role in bringing this down. And even though the difference between, say, 2.8 and 3.69% might not sound like much, that can add up to a heck of a lot of money when you consider how expensive houses are and how long they take to pay off. All right, second reason why home sales spiked despite COVID-19 is that home sales were significantly down earlier on in the pandemic. This is more about statistics than about customer preferences, but I still think it's crucial for interpreting the data. As I mentioned earlier, the recent increase in existing home sales came after a few months of drops. For example, sales decreased by 17.8% in April and then 9.7% in May after being seasonally adjusted. So anytime you start below the baseline with any statistic, just going back to normal will look like a substantial increase, just like that May jobs report, right? Trump loved touting it as, amazing numbers, but that was, of course, compared to April, which was abysmal. Now, obviously, this doesn't explain on its own why sales rebounded, but it gives some perspective on what these numbers really mean. Of course, when you say that sales increased by 20% one month and 25% the next, it sounds like there's something amazing and unusual going on, but in fact, it might just be that people are returning to normal, and that looks like a big increase next to how low sales were at the beginning of the pandemic. And if you dig a little deeper than the headlines, it looks like that's actually what's going on here. Existing home sales had a relative peak in February 2020 when they hit 5.76 million at a seasonally adjusted rate. From there, they fell to 5.27 million in March, then another drop to 4.33 million in April. Finally, they bottomed out at 3.91 million in May. And since that point, they've obviously rebounded dramatically. Sales were at 4.7 million in June and 5.86 million in July and 6 million in August. So if you look at the data from February to May or from May to August, it looks like a huge shift, and that's true. But when you take it all together, sales only went up by a total of about 4.1% from February to August. And that basically means that we're back to where we were before people started changing their behavior in response to the pandemic. Basically, when I'm interpreting the data, the fact that home sales went down before coming up really tells me two things. First, there's a statistical fact that a return to normal will look like an increase when you cut the decrease out of your analysis. So when you say home sales are up, you should probably also clarify that they're up from being down significantly, not that they're actually inflated compared to what you would usually expect. But also there are probably millions of people who wanted to sell their homes, but they had to put those plans on hold due to the pandemic, and maybe now those restrictions are loosening up, and they're ready to move. So some of those sales that would have happened in March or April under normal circumstances were delayed to June or July or August, so it looks like a spike in sales. So it's not to say that this increase isn't worth analyzing, it's just that it's important to consider the information like this at the same time. Another interesting data point from the recent reports is that even though sales of existing homes have gone up dramatically over the last few months, there are actually far fewer homes for sale than you would expect. In fact, there was a lower supply this July than in any July since they started tracking this information in 1982. So why would this cause home sales to go up? It might sound counterintuitive. People are selling more homes, so you might expect a greater supply, but in reality, that shrinking market can make buyers even more motivated, and that led to an average home price of $304,100 in July, which is 8.5% higher than what it was last July. So this is kind of a microcosm of the impact of supply and demand. When there aren't as many homes available, then you have to pay more in order to compete with other buyers. And from there, well, when people are willing to pay more, then it's obviously going to be easier for sellers to find interested buyers at their desired price point. Now, on the other hand, this could all change very quickly if there's a shift in any of these underlying factors, which is certainly possible in these unpredictable circumstances. If you follow the pandemic and the government response and the stimulus talks on this channel, you know the CARES Act included some pretty extensive relief measures, not just bailouts and stimulus checks, but also, mortgage forbearance or federally backed loans, right? An eviction ban that lasted a while into the summer. Well, now we have like the Trump one, but you can watch that video if you want to learn more about that. This sounds great, and obviously it's better than nothing, but at the same time, forbearance, for instance, doesn't actually forgive the mortgage payments, and when it ends, maybe you'll be able to work out a payment plan with your lender, but if the economy continues to struggle, it's possible that we could see a huge wave of foreclosures around the country. Of course, when lenders start foreclosing, that could lead to an increase in supply, so then maybe prices would go back down, the banks would have to take lower offers just to fill the homes. Now, this is all speculation. I can't tell you exactly what's going to happen over the rest of the year or into 2021. All right, everybody, thank you so much for watching this video, especially to the end of the video. I really, really appreciate it. This is a developing situation. As I said, I don't know what it's going to look like over the next few months. So depending on what happens, maybe I'll come back to this topic later on. A lot of people are predicting a big housing crash next year in 2021. But you know what? Either way, I think this video covers a few of the important factors that are affecting home sales right now. Of course, there's more that I could mention, but these seem like the key elements. Now, if you're concerned about the impact of coronavirus on the economy, you're not sure how things are going to go into the rest of the year, into 2021, I actually made a video on that topic. You can click right up here for my thoughts on the recession and whether it's going to continue causing problems and the factors that could influence that. All right, everybody, thanks so much for watching, and I'll talk to you next time. Bye-bye.